specialize in capital market investments, that is equities and treasury bonds. There's also treasury bills. And recently we started a fund. It's called OAK Fund. It also invests in the capital market space. It's a collective investment scheme, which they are called a special fund, because we are also allowed to do a bit of investments in the global market. For OAK Fund, we started last year in February. And last year we had a good return. We did a return of 29.3% for the year. And currently we have assets under management of 2.5 billion. One second. Let me check something. Yeah, so I'll start now with a proper introduction. So what is OAK Fund offering SACCOs? The investment challenges faced by SACCOs in money markets. Challenge number one, low returns. OAK Fund, we have a target return of 20% per annum. And we believe that this is a fairly good return compared with the current rates that money markets are offering, which I think are around 9% per annum, and they're continuing to drop. The other challenge we are solving for SACCOs is limited access to varied asset classes. OAK Fund, currently we are investing in call accounts. That's why we've put almost 50% of the fund. Also, we've put some in fixed deposits. We've put around 25% in treasury bonds. That is, we are trading in treasury bonds. And the remainder, we've spread them in derivatives and stocks. So you can see, OAK Fund is offering options, several options for SACCOs, so that they can maximize on their returns. The other challenge is demand for above average returns with manageable risk exposure. OAK Fund being a regulated fund, that is by Capital Markets Authority, there are some guidelines that we have to follow when we're investing, and also some regulations. Some of them are, first of all, the funds have to go to a custodian. Our custodian is KCB Custody, and later on I'll explain the role of the custodian. We also have to do quarterly audits with CMA so that they can confirm our investments and the returns that we are reporting. The other requirement that we are supposed to do is to have a trustee, who in this case is Cooperative Bank of Kenya. Also, the trustee does quarterly audits on the fund, and they write a report that they share with the CME. So those are the challenges that the fund is looking to solve for SACCOs. So what are the advantages of investing in OAK Fund for SACCOs? So number one, we've mentioned we give high returns. We have a net target return of 20% per annum. There is also cash flow management. A SACCO can use OAK Fund to invest or to save for dividend payments. There is also the advantage of access to global markets. And the last one is transparency in investments. Since we are heavily regulated, we are required to be transparent and offer disclosure whenever we are required. So how do you know if, or how can you tell if a fund is safe for your money? What are the areas that you, what are the key things that you look for? Yeah? I don't know if there's anyone who wants to try. There are 3 key areas to look for in a fund or in an organization if you want to know if safety of funds is guaranteed. Anyone who wants to try? Yeah? Calculator. Regulator. Yes, thank you. Number 1 is regulatory oversight. That one is very important. Without that, there is basically no way of telling how the funds are being managed or how they are being invested. There are no way of telling the performance because there is no obligation to do so. So yeah, number 1 is the regulatory oversight. For OC funds, our regulator, again, I'll repeat, is Capital Markets Authority. They've given us the guidelines and the regulations that we need to follow as we're investing for our clients. Number 2, anyone else who might want to try? Yeah, there are 3 key things to look for when looking at the safety of funds in an organization or in a fund. Okay, number 2, I'll help you. Number 2 are structures. Structures. What are the internal controls? Yeah? Where does the money go? When a client sends money, where does it go to? Does it go to the company account? Where, management at the signatory? Or where does it go to? Yeah? So for OC Fund, first of all, by law, we are required to have a custody account, and that is where all the money go to for our clients. The role of the custodian is very simple but very critical. They act as a safe. They act as a safe. So any money that goes into that account, the custodian from that point has to account on how that money has been used, where it moved to, who gave instructions, and they are also guided by law as to which instructions they can act upon. So for a fund, the instructions are not so many. It's only investment instructions. That's it. We cannot wake up one day as Faida and say, we want to buy new cars. Please send us some money. No. The custodian cannot honor that instruction. It's only to pay or to settle for investment that we've done. If we've purchased a bond, they settle that bond, and that's it. The only thing they transfer to Faida is management fees, and that's it. Even if we are saying we have a target return of 20%, and let's say like last year we ended up making 29.3. we cannot say we will take the 9%. That one has to be distributed to the existing clients. Point number 3, it's the investment policies. Investment policies. What are the investment policies? What rules are we following when we are making investment decisions as the fund manager? The fund manager for Oak Fund is Faida Investment Bank. Do we just wake up one day and say, maybe land here in Bogoria looks like it will appreciate in the next 1 year, and we start buying land here? So we have an investment policy which guides us on how we are investing, and that investment policy is guided also by the requirements that we have from our regulator, who is Capital Markets Authority. So to begin with, Oak Fund cannot touch anything that's not in the capital market space. Yeah, so we are limited, number 1, to that. Number 2, we also have internally an investment committee within the organization that meets weekly to discuss the current investments, how they are going, and the investments to be done for the the other issue I would like to maybe address is a common question that we've been receiving, is the issue of how are we making a return of 20%. Yeah. For those, for the few members maybe who've been communicating even in regards to the opportunities in treasury bonds, I think they've been noticing there's been a lot of capital gains since maybe last year. Just as an example, yeah, like there's a bond we were showing recently in January, and currently that bond has appreciated with around 2 million for every 100 invested. That's already 2% return in a month. So it is doable. 20% is not a figure that we are cooking, yeah, or we are running a Ponzi scheme. 20% is very much doable. That is just one example of how you can make 2% without even sweating. Now you can imagine if we are waking up to do this job every day, why can't we deliver 20% to our clients? Yeah? It is very much doable. And another belief I think that is usually out there is that, the higher the return, the higher the risk, or the more suspicious you should be. It should not be like that. Because again, we've seen even organizations that were maybe even offering 10% per annum, and maybe still they had challenges. Yeah, they went down. So it does not mean if we are saying the return is 20% or that's the target, that the funds are at risk. No. Or in other words, I can maybe put it in another way. If we say, as Oak, we are targeting a return of 10% per annum, does it automatically make it, less risky? Yeah. Does the fund now become secure because we've said now we'll offer, maybe we are targeting to offer 10% per annum? No, it doesn't. The issue of safety of funds is based on the issues, on the key points that I highlighted before: regulatory oversight, structures, and investment policy and transparency. Those are the things that secure the funds for the investors. But without those, even if a fund is saying they'll deliver maybe 5% and they don't have those key things, there's a big risk on the funds. Yeah. So another thing to note also is, let's say currently I know money markets are offering around, for institutions, 9% or lower. If you negotiate very well, they'll give you 9%. For individuals, I know maybe now it's around 6%. But the question I would ask is this: if the 1-year T-bill currently, as per last week results, is at 10.3% per annum, without even doing a lot of work, which means they should be able even to deliver more, because already there's a base rate that has been set by the government. So that's another way of looking at it. So you're all welcome to ask more questions. For the requirements, there are not so many. One second, let me check for. Yeah, for the requirements for corporates: copy of CR12, KRA PIN, certificate of incorporation, ID copies of the account signatories, KRA PIN, certificates, copies of the account signatories, passport size photos for the signatories, and a duly filled and signed form, and a board resolution letter. For individuals, it's just passport photo, KRA PIN, copy of ID, and the first page of your bank statement, just to prove ownership. And with that, I think I'm done. Unless there's anyone with a question? They'll be visiting the booth. That's okay. All right, we are outside. You can come at any time. All right.